This is a method where you are going to be able to be the first one into a stock to catch it before it goes way up or way down, depending on the direction you want to go. So this is PayPal. You guys notice that PayPal came down through the sweet spot, and it is now what I call a dog stock. And a dog stock is where it just sits on the bottom here of your stochastic and goes sideways for a very long time as your price just declines and declines. This was about $300 a share just about a year ago. And now it is suffering greatly, but that's okay. What we can do is add what I call a tracker share. So it is one share that you are going to buy. So right now you would spend $72.40 on one share of PayPal. Now the idea behind that, if you're like me, you have a watch list and your watch list has 40, 50 stocks. And the odds of you going through that watch list every single day and catching every single day a stock that's about to come through the sweet spot, they're not very good. So what I do is I buy one share. I spend $72 here and I just let it go. And odds are that the stock price is just going to keep declining and declining. Worst case scenario, PayPal goes out of business, never exists again. I lose $72.46. Best case scenario is this. Eventually, this will very quietly start creeping up towards this sweet spot. And because it is so out of favor and because it's lost so much money over a long period of time, big institutions don't care about this stock anymore. It's not a focal point on their radar. So when this thing does change its trend and it starts to creep up through the sweet spot, you're going to be entering right here at 32%. And the stock price will be climbing very slowly. Eventually, those institutional investors will take notice and they'll start jumping in, pumping volume into it, and you will start making these gains going in the positive direction. Now, you made an extra probably, 10% down here by just having a tracker share and knowing that I am going to find a stock very early. You could do this in the opposite direction too. Let's look at Exxon right now. Exxon has had an incredible climb with the rest of oil. It's in the overbought area and it's just going sideways. And you notice right here, we have this little blip down. So what I'm going to do, and what I've already done, is I've shorted one share of Exxon for $95.89. Worst case scenario, this thing just keeps going higher and higher, and eventually I'll exit it and I'll take the minimal loss because it's just one share. Best case scenario, this thing drops right below 80% and starts going towards the bottom, and I am the first one in here grabbing these red engulfing candlesticks. It's just a way where you can squeeze out an extra 5 to 10%. This is a great way to put even more money in your pocket by spending very little to do so. And I did a video on more in-depth long-term trading. Catch it right here. I'll catch you on the flippity flop.